Baxter is a company that is based in medical devices. Anything for uh, kind of the backbone of doing medical analysis and things like that. So let's take a look at the chart. First things we notice is the stock is at a modest price, about $38 a share right now. We also are noticing that. Um, Let me get this menu off the screen here. We're also noticing that they have positive earnings. That's an important thing if we're going to make this an underlying symbol in our kind of trade strategies. And it's nice that they're giving dividends to their investors. That means that the investors are not going to be pounding down the door per se at Baxter, demanding that the company do something to raise the equity prices. If they're getting a fairly healthy dividend, a lot of the investors will be happy with that. So that creates kind of that ability for a sideways choppy stock that we can then turn into one of our premium trades where we can start pulling off an income on it. And we're going to want to leg into this, I think. I'm trying to go back here to find out when we had a little bit of a trend change. So I've gone back 2 years so far. I kind of want to just get, and this is something that I commonly do. This is like doing my homework and learning about the history of a symbol. So you can see that, especially during the whole trying to figure out the COVID pandemic, Baxter was trading in a sideways choppy pattern up here around the $80 point, which kind of makes sense if you think about the whole story. Let's keep going back to even pre-pandemic. So I'll come and pull down the stock, and I'm going to go back, let's say 5 years. And I even want to go back, let's see if we can get back 10 years. And this way I'm looking at a monthly chart. So you'll notice, Baxter spent a lot of time down at the range that it's currently at. And then it had that gain, and then it was up here. And then it only has probably, they didn't need as much of their materials. But what I notice as I look at the chart over time is that this symbol and the investors that price the symbol, because remember, there's correlation, there's the actual investors and their accumulation and distribution of shares of this stock, and then of course there's the performance of the company. They tend to like to have this thing go sideways. It has step function increases and decreases. So this is John. John, I think you found a great symbol. It looks like it's on a 2-month kind of down. So I don't want to do anything with this right now. Actually, there's one more check that we want to do before we come up with a plan around this, and that is, are the options, is there liquidity in the options? Sometimes there's not any much, not anybody trading these things. And one of the options that I like to check the most is not necessarily that near-term option, but I'd like to check about a 3 to 6 month out option, because I'll be using that option in my strategies as kind of a protective hedge. So that would probably put us in the January, February timeframe. So if I take a look at the February option, and I'm going for the February option because the January option, that's a leap. And so it's going to have more liquidity just because of the nature of being a leap. So if I want to get more of an understanding of what the regular option series are, I'll look at this February option, which was just created not too long ago and made available for us to trade using standardized contracts. And I'm specifically looking at the bid-ask spread to make sure that there's investors in there. And the bid-ask spread on both the put and the call side look pretty small. And so that tells me that the market makers are in there and they're funding, they're okay making smaller spread because they know that they can do volume. So that verifies my check that there's enough liquidity for us to do some different, fun option strategies on it. But I want to let this symbol bottom. and I want to find out where it bottoms. And I may want to let this thing, once it bottoms, mature a little bit. That means I almost want to paper trade it a while. But when it bottoms, I mean, the other thing you might think about is Baxter in your portfolio for the long term, because who knows, another, you know, cutting edge something in the medical world could happen, and Baxter through correlation may go up again. Some people would want to have this for the dividend. So in that case, once it bottoms, and I'm going to keep saying that, I don't want to do anything until I see it form a nice bottom and test that bottom. I could do some strategies like doing cash secured puts in order to buy that. It's basically like a limit buy order, but you get paid for it. So I could see doing that, picking a price and automatically reducing my break even or cost basis on it because I get a premium up front. And if I don't get anybody to sell me at my price, then I get to keep the premium. So I can see doing that strategy. I could see picking up some of the stock just outright and then looking for slight appreciations to then leg into some premium trades. If you do that, every time you sell premium, look down at your break-even price, look down at levels of support, and place a protective option there that you can then roll out. Again, our protective options, 3 to 6 months out, strike price down near where we would bail out of the trade. I think those are great hedges, and we apply them at the same time we sell premium. Because remember, when you sell premium, you put yourself under an obligation to perform. So let's go ahead and make sure we insure that position at the time. Once that premium expires, we can then roll out of that insurance position. And a lot of times, the appreciation on that insurance, because of the directional move of the stock, allows us to get out of it at a positive. So I like this, but I don't want to do anything now, John, until we bottom out.